Funny Biz. Good morning, traders and trendsetters. It's 6 a.m. on August 19th, 2024, and welcome to Spy Trader, your go-to podcast for everything S&P 500. I'm Funny Biz, here to make the markets more understandable and fun. Today, we've got key market news, analysis, and trading recommendations. Grab your coffee, and let's check the pulse of the markets. Transition sound, Funny Biz. Let's dive into today's key news items. First up, Lowe's Companies Inc. (NSW) announces Q2 earnings tomorrow. Analysts forecast earnings of $3.97 per share, down from $4.56 last year, and revenue at $23.91 billion. Lowe's has a 1.91% dividend yield, or $1.15 per share quarterly. The S&P 500 showed a 0.2% rise last Friday, and futures suggest continued bullish momentum. The Jackson Hole meeting is coming up, where Fed Chair Jerome Powell might hint at potential interest rate cuts by mid-September, fueling market optimism. Goldman Sachs has reduced the U.S. recession probability estimate from 25% to 20%, with potential to drop to 15% with a positive jobs report, creating a favorable environment for stock investments. Transition sound, Funny Biz. Let's analyze this. Lowe's earnings decline might seem concerning, but broader economic conditions and market expectations should be considered. Despite the drop, Lowe's remains a solid dividend payer. Joseph Feldman's market perform rating with a price target of $230, lower than its current $241.15, suggests potential price volatility post-earnings. The S&P 500's positive sentiment is driven by anticipated rate cuts. Sectors like technology could see renewed interest if the Fed signals a dovish stance at the Jackson Hole meeting. Goldman's revised recession probability is another positive sign, suggesting improving economic fundamentals and potential upward movement for the S&P 500. Transition sound, Funny Biz. Time for trading recommendations. Drum roll, please. For Lowe's, if you hold shares, retain them for the dividend yield. New entries should wait until after the earnings announcement to avoid downside risk. The 1.91% dividend yield makes Lowe's appealing for income-focused portfolios, possibly buying on a post-earnings dip. For the S&P 500, consider sectors benefiting from lower borrowing costs, mainly technology and consumer discretionary. Tech stocks like Apple, APL, and Microsoft, MSFT, could rally in low-interest environments. Consumer discretionary stocks like Amazon, AMZN, may see increased investor interest with lower rates spurring consumer spending. And our lighter side, how do you describe a well-balanced market? Equilibrium. Closing sound, Funny Biz. That's all for Spy Trader. Remember, markets are about patience, strategy, and a sprinkle of humor. Keep following us for timely updates and trading tips. This is Funny Biz signing off. Stay savvy and happy trading. Outro music plays.